Hello everybody, and welcome back to another edition of the Money Garden. So today is our final step and step number 6 in our journey to the 6 steps to financial independence. So today we're going to cover for you about preserving your wealth. So let me just review very quickly the 6 steps to financial independence. In the previous episodes that we covered them, number 1 is cash flow. Number 2 is emergency fund. Number 3 is debt management, rather debt elimination as I like to call it. Number 4 is proper protection. Number 5 is building wealth. And then number 6, which we're going to cover today, is preserving your wealth. So once you built it, once you have all your little ducks in a row, well, how do we make sure that we actually preserve it? So there is two main points I want to cover today with respect to preservation of your wealth. Number 1 is taxation, and number 2 is estate planning. So on the taxation side, a couple things I wanted to mention for you guys. One is understanding how we pay taxes, right? So today, because how we pay taxes and how you're going to be taxed on your wealth that you have built is going to determine ultimately how much money you're going to get to keep, right? So number 1 is we have three ways that we pay taxes today, right? So number 1 is something what we call tax now. So if you have your money in mutual funds, if you have your money in a checking account, right, and you make a little bit of money on it, or any other investments, right, like even real estate, any investments that you are going to have growth on it this year, and you're going to take the money out and you're going to use it, you're going to be taxed on it, right? So that means tax now. You're going to be taxed on it in the year in which you're earning that extra interest or that extra income, right? Number 2 is tax deferred. So on tax deferred, the most popular accounts that majority of people would know or have heard of it would be a 401k, for example. So if you have your money and you invested long term, generally these are for, again, the purpose of retirement, supporting your retirement, would be a 401k, would be a IRA, would be a Roth IRA. So I would invite you guys to make sure today, we don't have, for interest of time, I don't have a lot of time to go through it, but make sure that you understand and educate yourself what would be the difference between an IRA and a Roth IRA and a 401k. But the tax deferred, one of the major differences, what I can share with you guys, that for example under tax deferred, it would be just a 401k or an IRA. IRA, by the way, stands for individual retirement account. A 401k or a 403b or a 457 if you're a teacher or in a school system, or if you're a police officer or a firefighter, right? So those are just different tax codes, but it all works the same way, meaning that you take money out of your income every year, you put it automatically in these investment accounts. You do not pay taxes for it this particular year, but you're going to pay taxes for it 30 years later or 20 years later whenever you retire. When you withdraw your money after 59 and a half, that's when you pay taxes. So it's kind of like you plant a seed, you're going to grow a beautiful harvest, right? And you didn't pay taxes on your seed, but you're going to have to pay taxes on your harvest. It will definitely determine, and it has a huge impact. So that's tax deferred. And then final one is tax advantaged. Basically where you fund these accounts with after tax dollars, so to speak, right? So you pay a little bit of taxes up front. You have paid your taxes on it this year. And then now you take your money and you put it in a Roth IRA, or you put it in a cash value life insurance. As of right now, these are the 2 modes only where Americans are allowed by the IRS to invest their money long term, grow their money, and do so tax free completely. So in a Roth IRA, if you put any money in, you know, when you take it out at 59 and a half, you don't have to pay taxes on the growth at all. There are other eligibility requirements and the Roth IRAs. Again, that maybe it's another episode, but today I just wanted to cover there's 3 ways that we pay taxes: tax now, tax deferred, and tax advantaged. And take the time, make sure, or talk to a professional, either do your own research, talk to a professional, to make sure that you understand the difference and how it will impact ultimately your wealth that you get to have, right? So then the other point I wanted to cover today is specifically trust, estate planning, basically. Trust, wills, and estate planning. So most Americans actually do not have any kind of form of wills or trust or estate planning. Most of them don't even understand. So let me just very high level clarify it a little bit for you guys and what's the difference between these things, right? So a trust is basically something, let's say if I want to leave money for my children, right? I have $100 million. I want to leave it for my son, right? Then I put it in a trust and I put conditions to it, right? I say my son cannot touch this money until he's 30, or he can have a little bit of money every year, you know. And also I could put other conditions to it saying only he can use it if he goes to college, or only he can use it if he buys a home, or only he can use it if he donates half of it to charity, or whatever stipulations I want for my money. I will put it in a trust, and then there's going to be an executor who is going to execute that trust. It's usually an attorney's office, or I don't know, maybe CPAs, but there's going to be a body that's going to execute that trust, or a finance company sometimes, or a bank maybe sometimes, who's going to make sure that my wishes are carried out as I asked for them. So that's a trust. So basically I'm putting my trust into somebody else, to making sure that I trust that those people are going to take my money and they're going to disperse it according to my wishes. That's a trust. There is a will, which is just a basic will, right? So a will is essentially, it's a last will and testament. Basically, it's three different components to a basic will. One is the will and testament that will say, you know, who I leave, what I leave to, right? I have a house and I have a car and I have this, so, you know, my son gets this, my daughter gets this, my aunt gets this, my cousin gets this, so nobody gets nothing and everything goes to charity, or whatever I want. So that's a will, and that is being put in place after my death, right? And then you also get a power of attorney for your medical decisions. So let's say if I get sick, right, and I can't make medical decisions for myself, I empower somebody to make those decisions for me. So that's a power of attorney for medical. And then the third is a power of attorney for my finances, right, to make financial decisions for me. If I have an income, how is my income going to be distributed? So those are the three components of a basic will, final will and testament. And then there is estate planning, which is just as the word says it. You know, you not only leave someone to take care of your final wishes or a certain amount of money, but it's your entire estate, and how is it going to be dispersed, what are your investments, what companies you buy, and all of those things, right? So hopefully this helps you guys. The basic two components, taxation. Make sure you understand taxation, how it's gonna affect you, and then number two, understand how to have a trust, a will, or estate plan, and what might work best for you. But I would highly recommend that you make sure you get at least one of them, or talk to a professional, educate yourself about it. Otherwise, everything that you have is gonna go through probate court. And trust me, your family or your children, they're going to have to hire an attorney, who are not cheap, right? And then there's court costs involved, everything, all of this, just to make sure that they actually get to have the things that you already intended for them to have, right? So save them some time, make sure, be responsible, have a will. So hope that helped you guys. With that, we wrapped up the 6 steps to financial independence. Thank you so much for watching. As always, I love to hear your comments, your feedback, like, comment, share, and I will see you guys next week. Thank you.